The central bank will henceforth discontinue the sale of foreign exchange to bureau d'echange operators.
This can be described as one in a million announcement that roiled the financial markets this week. For the central bank, this move became necessary following what it described as unscrupulous activities by the bureau d'echange operators. Following the advent of COVID-19 and its unintended effect on global oil prices, Nigeria's external reserves saw a heavy decline, with many foreign investors withdrawing their funds. This created a huge liquidity problem in the FX market.
You are not only talking about accessibility, you are even talking about cost. You know, the product that we cost at 360 naira for $1, we have to pay back now at 520 naira, you know, for $1. That is even if you get it.
Considering the weighty allegations against the BDCs, Channels Television reached out to the association executive, but they would neither pick nor return the calls. However, we went into the streets in Lagos to find out. These individuals operating on the streets are not necessarily licensed operators. While they're reluctant to talk to us on camera, we did find out that most of them carry out their activities under one BDC licensed operator.
Okay, so that means the bureau de change will go to the bank. Then from the bank, they can still operate.
Those who are traveling?
Yes, can go to the bank and collect that PTA or BTA. Okay.
In this circular released by the central bank to promoters of BDCs and all deposit money banks, the regulators refunding BDCs with pending license applications their minimum capital deposit of 35 million naira and licensing fees. The Apex Bank also directed deposit money banks to set up a designated desk to serve FX customers.
The very problem that we accuse the BDs of will now be translated now to the banks. Those problems will still continue to manifest. Those who are on that desk, they are not angels, they are human beings. And for as long as you have these opportunities, those abuses will still continue.
For many, the permanent solution to this challenge is liberalizing the market in order to attract foreign investors and increase forex supply.
They had to put the appropriate structures in place to encourage or to stimulate Nigerians exporting more goods or producing more of the goods that are currently imported, so that we can better have a stronger international balance of payment or international trade position.
We need to liberalize the rate at which people can bring in their supply. If you are imposing a rate of 410 on the export process, on foreign direct investors, on the embassies, on the oil companies, you are discouraging them from bringing in the foreign exchange into the economy.
For now, the problem in the FX market remains until the central bank finds a lasting solution to the liquidity challenge. In the coming weeks, market watchers forecast that the decision by the CBN will lead to a depreciation of the naira. However, for the week ended July 30th, the value of transactions in the INE market was up over 80% to $590.34 million. The NAFIT went up slightly, 0.02% to 411 naira 18 kobo for $1, while the BDC rate ended lower, 2.40% at 512 naira for $1. Ini John Mekwa, Channels Television News.